Hey everybody, what do you think so far about the stablecoin news from the OCC in this short series? How are you even liking this series? Do you think this is the beginning of digital currency in the US? Are you ready to find out what that catch was? Or should I say that potential snag for this to may or may not happen? Well, it is. Stay tuned. It's now time for a quick reality check before everyone gets too excited and starts thinking that the resurgence of Bitcoin and the news of the OCC allowing stablecoin means that we are suddenly going to see digital currency in banks everywhere. I do hope one day we do, and I think one day we will. But let me go back and tell you a few things. Remember Brian Brooks, who I was talking about? Well, he was appointed by President Trump and since then has actually stepped down from his position. He was not confirmed for a term as the comptroller, and there's no indication at this time or the filming of this class who President Biden's going to appoint. So this move to stablecoin and becoming friendlier with blockchain and digital currency, it could be temporary. It may be something that when the comptroller is appointed is rescinded, or of no importance, as they may focus on totally other things. But let me get to some recent comments from Janet Yellen. We'll get to who she is in a minute. And that is that cryptocurrency could come under renewed regulatory scrutiny over the next 4 years if Janet Yellen, and that's Joe Biden's pick for the lead of the Treasury Department, gets her way. Why? I got a couple quotes for you here. What she had to say. Cryptocurrencies are a particular concern. I think many are used, at least in a transactions sense, mainly for illicit financing. I think we need to look closely at how to encourage their use for legitimate activities while curtailing their use for malign and illegal activities. And that was from Janet Yellen. That's important because she didn't say no. She did say yes, but in a way. She also said she wanted to examine ways in which we can curtail their uses and make sure that money laundering doesn't occur through those channels. You see, when we're working with these blockchain-based financial networks, they're extremely attractive to criminals because they don't usually require users to have to identify themselves. But by law and regulations, most conventional financial networks are required to identify the participants. And because no individual or organization controls the blockchain-like networks, there's no easy way for governments to force them to comply with money laundering laws. So what should we do? Well, I'm going to tell you now, I do think this is something you should be keeping an eye on and something I would start preparing for now. Wait, what? Start preparing now? Yes, because this is something that was obvious in the letter was noting of how banks are positioned to handle this and become aware of the risk they will need to manage and monitor as they're working through getting prepared. See, the OCC letter pointed out that a national bank or a federal savings association could validate, store, and record payment transactions by serving as a node on an INVN, and that they may use INVNs and related stablecoins to carry out other permissible payment activities as well. But let's get to that risk part. First and foremost, when deploying new technologies, you have to comply with applicable law and safe and sound and fair banking practices. This is blockchain stuff's a new area for the US and something that is going to need a lot of attention. Banks need to be prepared for the potential risk. What are they? Well, there's a lot of them. So this means that specific attention for the technology and the payment channel or methods that will come when working with INVNs and their related activities are going to be very important. Of course, we'll still have our classic risk groups like, operational risk, compliance risk, fraud, and others. But another one, a bigger issue, I think, is staffing. I did see a year or two ago where a bank in Switzerland had funded and started a course at a local college for digital currency and blockchain to start educating and training and preparing the employees they were going to need in the future. But I haven't seen too much of that here in the US. See, these new technologies, they require enough technological expertise to ensure banks can manage and understand the technology, and the risk can be handled in a safe and sound manner. You can't handle a risk or manage a risk you don't understand or don't know. I do know that banks have, and credit unions too, have experience with managing risk in other channels that are very similar. But similar isn't always the same. Will you have the properly trained and prepared staff for this new stuff, this new product or services of the future, if you ask me? See, the world is ever changing, and the way people bank is changing, and the banking industry must adopt to meet these emerging new technologies. And it's my opinion to also help with the evolving financial needs of the economy that has led to, again in my opinion, the demand for banks to use INVNs to be able to carry out traditional banking functions as well as new things. You see, INVNs and stablecoins, they have incredible benefits. INVNs could actually enhance the efficiency, the effectiveness, and the stability of the provisions of payments. Unlike other payment networks, decentralized nature of INVNs doesn't have you relying on a single sole entity to verify payments. INVNs allow a comparatively large number of nodes to verify transactions, but in a trusted manner. There's no single point of failure. That's important. INVNs, though, are safe. They prevent tampering or the adding of inaccurate information to the database. How? Because information is only added to the network after consensus is reached among the nodes confirming that the information is valid. Oh, and that use of stablecoin to facilitate payments, it allows banks to capture the advantages that INVNs may present in a manner that retains the stability of the fiat currency. Then there are so many possibilities that come from that. See, IVNs can transfer multiple different cryptocurrencies, including, but not limited to stablecoin. But stablecoin serves as a means of representing that fiat currency on the INVN. And that means that stablecoin can provide a means for fiat currency to have access to the payment rails on the INVN. I hope you're seeing that means a lot can really be done through this. Well, maybe I am crazy. I've been told that before. And if you'd like to leave your opinion or a comment, well, then you can leave a comment or leave your opinion, or you can email me, kevin@paymentsprofessor.com. And if you missed a video, you can always go to the YouTube channel. And if you're looking for the latest on faster payments education, you better head over to the paymentsprofessor.com website. But for now, class dismissed.